Why are inflation expectations rising so fast? Why are inflation expectations rising so fast? It's very evident. Number one, public expenditure is rising at the fastest level in the United States in the past 10 years. A 10% increase in government spending in fiscal year 2024. Number two, the most important factor is that money supply growth is at a 27-month high. This is unbelievable. Therefore, inflation expectations are not a surprise. Inflation expectations are rising because money supply growth is rising and because at the same time, government spending is soaring. If we exclude the extraordinary expenditures of 2020, this level of expenditure is completely abnormal in an environment of economic growth. And more government spending means more units of currency in the system, means more money supply growth, means more inflation. What we need to understand is that inflation expectations are rising while global manufacturing PMIs are weakening. So, the manufacturing sector, which is heavily consuming energy, materials, etc., the manufacturing sector is actually weaker. So, it's not because of extraordinary activity. It's not because of tremendous industrial activity. It's not because of supply chain challenges. It is because of government spending and money supply growth. Central banks decided to cut rates and prioritize liquidity, which means prioritize disguising fiscal imbalances of governments instead of combating inflation. And what we're seeing right now is the consequence. You may remember that in 2022, Liz Truss, Prime Minister of the UK, was forced to resign because of an abrupt increase in government bond yields to 4.5% in a year in which inflation was higher than 10%. Well, what has happened since Keir Starmer presented his completely incredible socialist budget? Since then, the reality is that 30-year bonds have risen in terms of yield to the highest level since the 90s. That the 10-year government bond yield is at 4.7% and has risen in an environment in which inflation is less than 4%. So, if we look at those factors, what we can see in this graph, courtesy of Bloomberg, that shows the cut, is that the pound is sinking. Government bond yields are soaring, and soaring much higher than they were in 2022 with much lower inflation, and nobody resigns. What can we expect of Brazil? Brazil has been the poster boy of socialist policies as well. What did Lula do in his first year in government? Multiply deficit by 2. The increase in deficit meant that the market immediately was spooked and the Brazilian real has plummeted to the lowest level in years. In fact, the Brazilian real is at all-time lows after all of the support coming from higher exports, higher oil exports, etc. But what's most important about this is to remember that it is government that creates these challenges. Number one, the currency has plummeted. The Brazilian real is the worst currency in 2024 and continues to be weak in 2025. Furthermore, government bond yields in this graph, courtesy of Hedgeye, are soaring as well. What is this? It's the evidence of monetary destruction. It's the evidence that governments create inflation and then create these enormous problems that manifest in a weaker currency and in higher bond yields. Nobody believes that Lula is going to cut the deficit, and this is what this is showing. The Chinese economy will deliver its 5% target growth as expected. However, one thing is very important. Remember, we're talking about inflation expectations soaring. And we're talking at the same time of a weakening of currencies and a weakening of bonds because of that matter in the UK and also in Brazil. It's all a fiscal problem. If you look at it, what is happening globally is the reality that MMT doesn't work. The reality that governments are destroying the confidence in their currency, and that destroying the confidence in the currency means higher bond yields and lower purchasing power of the currency that they issue. But all of that is happening with inflation expectations soaring when Chinese growth is significantly below what markets expected. So, think about this. This should be disinflationary, just as global manufacturing PMIs should be as well. So, with China growing, but not as fast as some would have expected, and its enormous challenge in the real estate sector, with industrial production and investment below the levels of growth seen in the past, China is delivering on a level of growth that is incredibly positive compared with the risks of the economy with the real estate challenge. But those levels of growth, both in the global manufacturing and in China, should be disinflationary. Why is inflation persistent? Why is the level of inflation expectations rising? Because governments are spending way too much, and because money supply growth is way too high and rising faster than it should. Why are these things happening? Because governments refuse to reduce spending. The only solution to inflation expectations is cutting government spending. There is no other option. Either government starts seriously to cut government spending and to reduce the massive supply of new currency that entails, or inflation expectations are going to continue to be high and making people poorer. Remember, government makes you poorer. Keep defending freedom.